It's new. It's noon here in Bethesda, Maryland, and Ventnor, New Jersey, and this is news that you can use from CarEdge with your hosts Ray and Zach. And oh my God, you're glowing! It's like you're angelic with that light above your head.
Real high quality production here at CarEdge headquarters. Happy afternoon to you, Pops. You doing well today?
I am. I'm having a good day. Any day I'm above ground, I'm having a good day.
I love it, man. I love it.
Yeah.
I am glad you are above ground as well. Here's the deal. Car
Yes.
loan disaster, record delinquencies, and unpaid debt skyrocket. We've got that. We've got a few things that could be really, you've got to be kidding me. Maybe we will end up doing them for really, you got to be kidding me. Some stuff that I tweeted. If you're not following on Twitter, you got to be following on Twitter. There's some scary stuff that we end up sharing over there. But let's start with the delinquencies. That the headline in Auto Finance News reads like this.
Oh, I love when you read headlines to me.
Auto loans 60 plus days delinquent reach record high. Delinquencies reached record highs in the first quarter as consumers fell behind amid elevated vehicle prices and high monthly payments. 60-day delinquencies across the entire credit spectrum have reached a high of 1.9% relative to the loan base, according to Cox Automotive's first quarter industry insights and sales forecast call. Subprime delinquencies that are 60 plus days past due reached a record 7.3% as of February. Quote, the severe delinquency rate relative to the loan base increased in 2022, both in aggregate and for subprime. And by the end of the year, we're at historically high levels for both. Jonathan Smoke, chief economist at Cox Automotive, said on the call, quote, however, the increase in rate is being assisted by big declines in the loan base and especially for subprime, i.e. less new subprime loans being written. So, Dad, the state of automotive finance, we had a video go out on the main channel earlier this week talking about this stuff. This is a real headline. This is the real reality. And you are faced with millions of people who are going to have car payments that they're going to be missing and already are missing.
Yes. And the sad reality is a lot of those people that are behind in their car payments, they knew what the car payments were going to be when they signed up for their loans, whether they signed up for those loans a year ago, 6 months ago, 2 years ago. They knew exactly what those car payments were going to be, and they thought at that time that those were affordable. Well, as it turns out, when you have rampant inflation and stagnant wages, well, guess what? The money you do bring home every month doesn't go quite as far as you thought it was going to go when you signed on the dotted line for that loan. So it's really an unfortunate situation. It literally has nothing to do with the fact that interest rates are going up now, because these are all loans that were signed for a while ago. If these same people were in the market today, it would be even worse for them. Perhaps to the point where they wouldn't have been able to get a car anyway, because there would have been no way for them to think that the payment was going to be affordable going forward.
Now, the other thing that we've been covering that ties to this are obviously rising interest rates. And so you're in a situation where it's like, if I'm the consumer and I am starting to go delinquent, I can't make my car payment. Previously, maybe one of the options you had was, well, maybe I'll go refinance my auto loan. Maybe I can extend the term and figure out a payment. You can't do that right now. Like, imagine you're currently on, I don't know, we saw the average used car term extend all the way out to 70 months. Imagine you're on a 72-month note at previously you could get approved for 5, 6, 7%. Now you want to go refinance that, maybe extend it back out to 72 months from today. Well, your interest rate you're going to be quoted 14, 15%. It's just not an option. Like the crisis is deepened because the cost to actually borrow has gone up as well.
Oh, absolutely. I had a gentleman contact me this morning, and he's got a Lincoln Corsair lease, his wife's vehicle, coming due in December. And the Corsair only has 13,500 miles on it. So he's thinking, well, does it make more sense to buy it now before interest rates go up? Or should I wait and see what happens in December? Well, the Fed hasn't given any indication that they're going to stop raising rates. They have indicated that there's at least another 25 basis point rate increase coming. so I told the gentleman, I think it makes the most sense for him to do something now before the interest rates go even higher, and that he should check with his local bank or local credit union to see if he can get a preferred rate. And if he doesn't have a local credit union, to certainly check with our credit union partners to see what he might qualify with them.
Yeah.
There still are some better rates to be had out there than the average of 14.01% on a pre-owned vehicle.
Yeah, the Cox data on average APR is quite scary. We've
Yeah.
got the comment here, bubble. It's funny. We've made videos that talk about the bubble building. We've talked about the bubble bursting. The past couple years have all felt a little bubble-like and still continue to feel bubble-like. It's interesting. I talk to folks that have been in the industry decades, and they talk about how you really got to go back to 2020 pre-pandemic to get any semblance of normal behavior in the auto market. Even right now, it still feels bubble-like. But I will say, I see this comment here in the chat.
Yeah.
Defaults, lack of access to credit, and unsold inventory only leads to one place: crash imminent. I'm in that camp. I've been in that camp. We've heard, we've got a little bird in our ear saying that there might be a video coming out tomorrow. Also in that camp on a different channel, maybe going a little bit against Pops. But I think that's the only way that this ends, Dad, because inventory's eventually got to move, and these delinquency rates, sadly, Dad, I think they mean that the used car supply situation is actually going to get better. Pains me to say that, but you're going to see repos go up. We've already seen repos go up.
Well, we know repos are going up, and we've known that for quite some time, and that didn't do anything to slow the growth of the wholesale amounts that dealers were willing to pay at the auctions for these used cars. So, yes, logically speaking, looking at this, this debt skyrockets, as it becomes harder to obtain debt, as interest rates go up, as pricing remains high. Yes, you would logically, you'd go, oh yes, there has to be a crash. Well, yeah, I thought that 3 years ago. I thought that 2 years ago. I thought that a year ago. I'm still waiting for the damn crash. Why has the damn crash taken so damn long? So yes, I agree with the sentiment. Okay, but I just haven't seen it play out in recent history in all this time when we thought that it would and it should. So yes, I get why people are in the opposite camp of me. I get it, and I'll say it again. I hope I'm wrong. I hope I am. I hope you can all make fun of me in another month or two. Okay. I hope in the comments you go, see, Ray, we told you were stupid, you were a moron, you were an idiot. I hope that's the case. But I'm not betting that it will be.
Yeah. I hear you, Pops. I hear you. Anyway, the headline in Auto Finance News today, one of the leading industry publications saying, hey, this is an all-time record high. That's an alarm bell if there's ever an alarm bell. We've got some fun comments in the chat talking about perfect time to start a side hustle, repo side hustle. Yeah, I think it is. Go for it.
And they also mentioned in there that some of this is above pre-pandemic levels. Some of it is actually at historic levels. So I don't know. There just doesn't seem to be enough people pulling themselves out of the market to impact the market.
But we also talked about that yesterday. Jonathan Smoke said there's enough well-heeled buyers to support the new car industry at 13 to 14 million units. Well, they used to sell 17 to 18 million units, and someone is going to push us back in that direction. Although we also talked about Mazda's North America CEO coming out and saying they're going to be a luxury brand. Which,
they want to go more up market, upscale. It's like if all the leading indicators are that there's going to be a crash or that there should be a crash, well, why the hell is every manufacturer going to go up market and upscale? It seems counterintuitive.
It's a good point. I mean,
I'm pretty sure every one of these manufacturers employs economists,
Yeah,
pays
yeah.
attention to industry economists and other economists, and they look at the data like we look at the data, and they probably get better data than we do. So if 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 it seems counterintuitive, then why would they be doing it? And and maybe they're all betting wrong. I don't know. Um, maybe 2, 3, 4 months from now we can make fun of them as well. I hope, but I doubt it.
Hey, I'm kind of glad we've got a little bit of a storyline here that we can follow over the coming months. Different sides, thinking what'll happen in the near future. We had a thoughtful contribution come in. Let's turn our attention to
Oh
Aaron.
wow. Yes.
Aaron, thank you, sir. F80 M3 I've been tracking, one with a $5,000 price drop over the past 5 months. I feel like I'm catching a falling knife. Navy Federal has me at 5.8% on use. That's awesome.
Yes.
And for those of you who say, oh, I've got 800 credit, how's that awesome? The average APR on a used car loan right now is 14%.
Yes.
5.8 is awesome. I feel like I don't know when to pull the trigger. Any suggestions?
I feel like I don't know what to tell you anymore. Zach and many people in the comments are of the opinion that there's going to be a crash and that prices are going to come tumbling down. And I am of the opinion that what we are living through is what our new normal is. And unless we have a major recession, I don't see that giant crash coming that other people are suggesting. And obviously, if the manufacturers are suggesting they're going to go more upscale, they don't see that coming either. So I don't know. I mean, I'll say it again. I hope I'm wrong. But if I'm wrong, okay, if I'm wrong, it means that the economic conditions in this country and globally have worsened more dramatically than what anybody thought that they would. Okay. And so that the recession, which everybody says is going to have a soft landing or it's not going to be nearly as severe as some past recessions, well, it would have to be that it's a worse recession than what anybody's predicting, and that the outcome of that recession will be worse than what major economists are expecting.
Aaron, if I'm in your shoes, a couple other factors. How long is that pre-approval or pre-qualification from Navy Federal good for?
Yes.
Because if you can still wait a couple weeks, like I would be negotiating the out the door price with that dealer right now. I'd be seeing, are they adding back the $5,000 in fees? Are they mandatory warranty, things like that? And do you have a car to sell? Because your leverage in that deal may end up being the car that you can sell back to them. We have seen more upward pressure in wholesale used car values against lower priced used cars, more affordable used cars. We can look at the Black Book data here, even from this most recent week. Let me pull it up on the screen because I think this is helpful for Aaron as he thinks it through, Dad. You can see here the premium sporty car segment was up 1/10 of a point, whereas some other segments, for example, sports cars and near luxury cars and full-size cars, there was more movement. So that's been the trend, is you're seeing more pressure for subcompact cars, compact cars, more price attainable used cars, and you're seeing less pressure on an M3. An M3, there's I actually do think
specialty car.
Yeah, exactly.
Yes.
Exactly. And Aaron, join us at CarEdge. Work with one of the CarEdge coaches. Run reports on that M3. Let our team help you. Would be my recommendation. All right, Dad, let's switch gears just a little bit, okay? We have, for about a year now, been talking about a story that is worth continuing to beat the drum on, which would be the Federal Trade Commission, and they're cracking down on shady car dealer practices.
Mm-hmm.
We had, and I'll post this link in the chat for those of you who are unfamiliar with it, we had a headline this morning coming out in Automotive News, FTC investigating Illinois car dealers, Liberty, Leader Auto. The Federal Trade Commission has demanded auto finance and insurance documents going back to 2018 at Leader Automotive Group and back to 2019 at Liberty Auto Center. It's worth mentioning before we dig into the story, the largest FTC action we have ever seen against a car dealer came out of the state of Illinois. Against Napleton Automotive Group. It was $11 million, if I'm not mistaken. And they are going back to the archives, Dad. Deal jackets. They're saying they got to review everything from 2018 and 2019. What happened here at Leaders and in the state of Illinois?
Liberty.
Yeah.
Well, I mean, they're checking to see that if they were discriminating against a certain class of customers, if they were employing discriminatory practices, and if they were bundling and packing payments with product that people didn't necessarily want or ask for. So it's not, as we know, it's not necessarily an uncommon practice in the car business. What I find interesting is how far back the FTC wants to go. Now, if you're going back to 2018 and you want to look at every deal jacket, every deal that was completed, or with the other dealer, they're going back to 2019, that'd be a lot of damn deals. Okay, that means that they have real suspicions and probably some documentation already to suggest that there is something or was something that was ongoing that really needs to be delved into. So if they're going to be looking at, the one dealer is 3,000 sales a year. So if they're going to look at 12,000 transactions, trust me, they're going to find, even if it's a relatively small percentage, they will find deals that are suspicious at best. There's, other than doing the investigation, there's nothing where the FTC is saying they've done anything wrong. They just want to check it out. But as we all know, typically where there's smoke, there's fire. There's got to be a reason that the FTC was alerted about these two dealer groups. So it will be interesting to see what happens. So, yeah, I can tell you from when manufacturers would come in and do, they would check deals to see that we applied for incentives correctly. And when they would pull deals, I mean, you had to pull the whole deal jacket. Now they would come in and they would pull, they would give you a day or two notice, or few days notice, and you had to pull 100 deal packets, and they would go through them, and then they would look at that, and they would see during those incentive audits how many deals were bad in there. And then they would just use that as a percentage, and they would go across the board. And so if there were 10 deals, they were saying, okay, we're going to extrapolate that 10% of the incentives you applied for were applied for inappropriately, and we're going to charge you back. You're going to write us a check. So yeah, dealers hate when you have to give them the entire deal packet. I remember having to do it when I was at the Nissan dealership outside of Atlantic City, because the IRS came in, and they were investigating one of my customers for tax fraud, tax evasion, and I had to pull his deal packet, and it got ugly for him.
Yeah, definitely. And I think, to be clear, we talk about on this show often, and we are obviously huge advocates for transparency, fairness, and efficiency in the car buying process. That's what we stand for at CarEdge. We've talked about it ad nauseum. The FTC can propose new rules. We will be huge advocates for the FTC every time they propose new rules. We need to see enforcement. And I wonder, Dad, this is another time in Illinois. I wonder if it's the state's attorney general in Illinois that is really a strong advocate for consumer protection in this space. Because again, it was Napleton was in Illinois. Now we've got this happening in Illinois. So I also think it falls upon the local state's attorneys generals. Like, the likelihood we see anything ever happen with the FTC in Florida, let me ask you, 0 to 10, 0 to 100, man, you can get real granular here. How likely do you think we see any FTC actions in the state of Florida in the next decade? What do you think?
Well, 0 to 100.
0 being unlikely, 100 being a slam dunk, of course.
I would be about 1 or 2. Yeah, I mean, it's just, some states take it more seriously than others.
Yep.
Most states, even though they have rules, laws, and regulations on the books, don't enforce them. They look the other way. There's too many political contributions that that are to be had from auto dealers and dealer groups. So you turn a blind eye,
Yep.
and that's part of the problem. And especially if and when the people who are in the positions to bring about cases are elected and they need what's that thing political contributions so they can fund their campaigns. Well, that right there creates a situation where people can be I don't know, bought off.
Incentivized. Yeah. But
Incentivized
anyway,
not to look. Yes.
we will every FTC story. I read their press releases when they come out. I have a good pulse on that. We will share every single story because, again, huge advocates to let the cream rise to the top. I.e., we've got Igor and Kimberly in the chat talking about how they loved when folks came by to pull deal jackets because they stood behind the work that they were doing. We've got Mrs. Car Questions answered here from with Brandon over at Car Question. They love when people come in. That is all good. Y'all need to be the people that are championed. These other groups that are getting investigated, there needs to be enforcement of the rules.
I believe I shared with you a incentive audit when I was with Acura. And at that time there were two, and this was in Scottsdale, and there were two Acura dealerships at that time in the Phoenix metro market. And when they came in, they said, well, we need you to pull 100 deal jackets. No problem. I didn't care because I knew they were right. Okay. Now the other dealer, the sales manager that I used to do dealer trades with, the same sales manager who used to trade me cars that he had already reported as sold to the manufacturer. Okay. That sales manager, he got fired the day of their audit because the dealer had to write a check back to Acura for about $250,000. Okay, we wrote a check for nothing because they couldn't find anything wrong with the 100 deals that we
proud
did.
of you. I'm proud of you, Dad. I'm proud of you.
Well, when it was really funny when the area vice president used to say to me, well, the other dealer outsold you this month. And I used to look at John and I'd go, John, they might have out RDR'd me, but I'm pretty sure they didn't outsell me.
RDR, for those of you playing along at home, retail delivery report. It's how you tell the manufacturer you sold a car. Obviously, I'm going to say back in the day, but it probably still happens today, Dad. You don't actually have to sell the damn thing to RDR it.
No, you just have to report it as
you just have to RDR it.
Yeah, and then I'd deal or trade, and I'd get the car, and I'd complain to my factory rep, and I'd say, "Well, what are you going to do about it?" They go, "Well, nothing." Well, what's the incentive for them not to cheat then?
Again, big advocates of the FTC's work. Would love to see more of it. FTC folks, you watch the show. We would love to support you. Please let us know how we can. Taker, we appreciate the contribution. When trading in, how is sales tax calculated? I'll let you answer, Pops, but let me just pull it up on the screen. We have this guide. I'll drop it in the chat, but what is the answer, Dad?
It depends on the state. In many, many, many states, you'll get a credit for the value of your vehicle and you won't have to pay sales tax on that particular amount. But there are a handful of states where you do not get that tax incentive, that tax credit. So trading a car, it doesn't impact it. It will not impact the amount of tax you're going to pay. But in the vast majority of states, it will.
Dropping that link in the chat. Great article on how you can maximize the value of your vehicle trade. And it is probably a good time, and we actually have it in line here. Where was it? Right here. If you are thinking of selling a vehicle, please go to caredge.com/sell or use the form that's here on this page. Plug your vehicle and get cash offers. Do not just take the trade-in offer from the dealer. Trade-ins and good used cars are hard to come by. So that is your leverage in most car deals. And I should mention, Dad, our promotion back at caredge.com, it ends tomorrow, end of day tomorrow. So you can get 25% off if you join CarEdge for our data plan or our CarEdge Coach product. We also have $100 off on our warranties ending tomorrow. We are going to get in the habit of doing these kind of quarterly. So this is your chance to take advantage of that. Hey, Kimberly, looking like luck of the Irish with St. Patrick's Day, $100 off if you take advantage of that between now and
and what's the code you need to use for that? Would that be gold?
Yeah, but all the codes are automatically added at
Oh,
checkout, so
okay.
you no longer even have to add them. It'll just automatically apply.
Wow. So
Yeah.
so you're telling me that even if somebody doesn't realize they could get the discount, you're giving them the discount, whether they
Indeed.
realize it or not.
And if you haven't worked with our team before, I encourage you to check out our team. We've got a bunch of great coaches: Ashley, Justice, Kimberly, Phil, Jennifer, Catherine behind the scenes. Just a huge thanks to the group behind the scenes that
Yes.
works on everything here at CarEdge. Some folks on there that are on the team that didn't make it to headshots, but we'll make sure we get those this year. Okay, Pops, we have a couple other things, but I think I need you to give me an ad lib before we jump to them.
Really? You gotta be kidding me.
Not sure what accent that was. I posted this over on Twitter, Dad.
Yes. And I responded.
Yeah, we're gonna look at your responses. Here we
Yes.
go. We've got this is a real ad, folks.
Yes.
This is a real freaking ad, and here we go from Greasebelly. I've spoken to Jennifer before. She's cool. Jennifer is super cool.
Yeah, very cool.
I like Jennifer a lot. Jennifer's
Yeah.
great. All right, here we go. This is a hot deal on a 1997 Chevrolet Cavalier. Dad, it's got 127,765 miles on it. Stock number ends in an A, so it's a trade-in.
Yes.
It is actually on sale, Dad. It is $6,497 off of its original sale price. A $5,000 bargain that was previously at $11,400.
This is what we refer to, at least we did it at the dealerships I ran, as a Wozniowski.
Okay. What is a Wozniowski?
A Wozniowski. We used to have the little placards we could put on the cars that said the price was 11,000, whatever it was, and then the now prices. So we just dubbed it a Wozniowski. So the Wozniowski price on that was like, totally ridiculous. And exactly what was is the was price when it was brand new in 1997. Yeah. I'm pretty sure that's a bargain that anybody in their right mind should walk away from. Yeah.
Please tell me no bank would finance that. You could save an additional $4,995 by not buying it at all.
I want to tell you a quick story about your grandfather and your grandmother. My parents. My mother used to go shopping, and she in Philadelphia, and she'd come home from shopping and she'd say, "Leonard," that was my father. "Leonard, you have no idea how much money I saved you today." And he would go, "Why is that, Dorothy?" She said, "Well, the shoes I bought were on sale and I saved well over $150. And he said, "Well, what did you spend?" And she said, like $100, whatever it was. He said, "Well, I know how you could have saved me $250. You didn't have to go shopping at all." And that's how I feel about that Cavalier. Yes.
Please, on Instagram, I am at Chefska. My dad is at Raz's Jazz on Instagram, Twitter, all those things. Send in what you find online. We love sharing it on the show here. Usually gets us a good chuckle. My dad's quite funny, so it's fun to hear his replies and stories as well. Congratulations to Stinger Envy, one of our community members for a long time. I have a win for today. Just got a 2023 Volkswagen Tiguan at 6% under MSRP, which saved me $2,500 with no add-ons and no dealer markups, thanks to the CarEdge training.
Good for you, Stinger Envy.
We probably don't give it enough credit. We have Deal School out there as well. So if you join CarEdge, you end up getting access to Deal School. Deal School is, like, as far as I've been able to find, doing my research, the most all-encompassing training before buying a car. You're buying a car for the first time, you got to access Deal School, the community forum, everything there. So it's awesome to hear success stories like that because it works.
Yes.
People really save money.
Absolutely. Even though times are tough, even though it's difficult, it doesn't mean that if you don't put in the time, effort, and energy that you can't find a deal. You can. There's always going to be a dealer who will work with you. There'll be many more that will choose not to, but there's always that handful of dealers that realize they're better off having something today and hopefully getting more out of you in the future because you'd want to do business with them again than force you to overpay knowing that they'll never see you again. So.
Yep. Pops, we've got Ellen here in the chat. Please If not
Yes.
today, can you talk about the 2024 new tracks? We are pro tracks, so the new tracks look
Yes.
good. My lease is up and only given 1 month extension. Have to put $500 to get an order number. Ellen, I really encourage you on the show here. We can help a little bit. Like, obviously, we can try our best. Work with one of the car coaches. This is what they do day in, day out. I think this month that we're going to end up helping well over 2,000 people with car deals. New folks that are joining the community and getting help with car deals. So I'm feeling great about that. But Ellen, if your lease is coming due, we have a great guide. I'll drop it in the chat before we end today's show. What you can do at lease end if you need to help negotiating a brand new vehicle, that's what Deal School's for. We've got comments about tell us about leasing car. There is a finance component of a lease. It is quite expensive right now, so there's a lot of complexities when you go through this process. Go for it, Pops.
When I managed dealerships, did you call the vehicles sleds? Only when they were, Mark. Only when they were, and many of them were. And I can tell you, having worked in the Atlantic City area, there's a little bit of salt air down by the ocean. I mean, literally, there were cars that were appraised for $1. $1. I mean, that was it. I mean, they were worthless. I mean, they the floorboards were rusted out. There were holes. It was so yes, those definitely qualified as sleds. Yes.
Dropped a couple links in the chat. Deal School's in there. What to do at the end of your car lease is in there. So please click on some of the links in the chat for additional resources.
Could you put a link in the chat for the glossaries?
The glossary of terms, yeah.
Yes, because I oftentimes I'll see comments. Well, what's buy rate? You talk about buy rate. What is it? And many times I will forget to explain yet again, what buy rate is. And for people who are listening right now, buy rate is what the bank charges the dealership for the money, and the dealership is free to mark it up. And the reason they are is because it is what's known as indirect lending. You are not applying to the bank on your own. You're asking the dealership to apply to the banks on your behalf. That's indirect lending. That's why the bank will give the buy rate to the dealer, and the dealer is free to mark that up.
Is the exact reason why we partnered with credit unions so that you can come in with a pre-qualification. And Kimberly, I see you asking about the F&I glossary of terms as well. Just dropped that in chat too. So yes, we partnered with credit unions. Just go back to CarEdge.com/finance. Do not just walk into a dealership and expect indirect lending through a dealer to yield the best interest rate. Even if it does, you should still have leverage with a pre-qualification. Yes. This is what we do day in, day out, folks. We're simply here to help. All right, Pops, let's call it a show. We'll be back tomorrow with Kimberly, if I'm not mistaken.
Yes.
At what time?
Yes. I believe we're scheduled to be on the air noon Eastern, 9 Pacific, 8 a.m. Alaska time.
And we should have a Saturday show. So I'm looking forward to getting back in the groove doing Saturday shows. You did a great job last week, Dad, but I'll be back with you this Saturday if you're up for it.
I am. I'm looking forward to it.
All right, everyone. We will see you tomorrow. Have a fantastic Thursday, and thanks for being here with us.
Bye-bye, everybody. Thanks for being here. We'll see you tomorrow.